Okay, so in this video, I want to explain what a footprint chart is and how you can actually use it to enter trades, like this trade that I took here on Bitcoin on the 5-minute time frame. It looks a little bit overwhelming, I know, I've been there, but it's not that complicated. It's fairly simple and it's logical, right? You'll understand this pretty quickly, I think. So here what you have is regular candles, right? You can see regular candles, green candle, green, red, okay? That's normal candles. Then when you zoom in, you see each rectangle here. It's what's going on within that candle, the actual sellers on the left and buyers on the right, the market sellers and the market buyers. You don't see the limit orders there, but I'm going to explain to you then how you can guess what the limit orders are doing. But let's just focus on each individual candle. So again, this green candle here, this is the body. You would have a wick here, which you can't see, but you just guessed that there's a wick because you have this rectangle here, which is the full candle, including the wick here at the bottom. Okay, so in this rectangle, you have on the left all of the market sellers and all of the market buyers that clicked the button during that candle. And this, you have different levels here because it's at each price level. So at 120,528 here to the right, you had 26 market sellers versus 3 market buyers, okay? And so each level, you have different amount of contracts, sellers versus buyers on each level of that candle, okay? Now, what you have here at the bottom is the delta. Now, the delta is what? It's the total amount of buyers. If you added all of these numbers here, all of these contracts that were bought, you would get a certain number. And here you would add them all and you would get a certain number. And when you would subtract the sellers from the buyers, right, you would get that number, minus 39. So I'll give you maybe another example. Let's say in this candle here, to make it more simple, let's say you had 150 buyers on this side, and you had 200 sellers here. Let's say you had 150 buyers and 200 sellers here. That would be 150 minus 200, and the delta would be minus 50, right? 150 buyers minus 200 sellers would be minus 50 delta. So that's a negative delta. In this case, you have, I'm not going to add all this up right now, but you have a certain amount minus whatever amount was here, equaled at the end, minus 39. So you had 39 less or more sell contracts than buy contracts in that candle, okay? So now you understand what each of these candles are. Now what you notice already, and that's the beginning of the strategy that you can use, is even though we had negative delta, more market sellers than market buyers, the candle went up. It had a long wick at the bottom and it closed bullish and actually even engulfing the two previous candles, this one and this one, okay? So you had more sellers than buyers, negative delta, but a bullish candle. This is what you call a divergence between the delta and what the price action is actually doing. Delta is negative, price action is bullish. What does that tell you? Already you know something, even though you don't know where the limit orders are and how many limit buy orders there are in this area. Well, there were clearly more buy limit orders than sellers because it went up. So that means that there's I'm getting some TradingView alerts. So you have more buy limit orders absorbing all of these market sellers and pushing price up. So the limit orders, the buyers are actually stronger than the sellers at this point because the market sellers are trying, but the buy limit orders are stronger. So we pushed up. First clue, you have a divergence, and that's the first thing you're looking for is divergences. Second clue, you don't have to have that every time, but look what happened. This wick here of this candle took the lows of 1, 2, 3, 4, 5 candles of all of the previous candles. So you can imagine there were probably some stop losses here, and these stop losses got hit. So we grabbed some liquidity, if you want to call it that way. Okay, so you have already two clues. Divergence, bullish candle versus negative delta, so absorption plus grabbing some stop losses down here. You can see also that at the bottom of this candle, there are more sellers than buyers. 50 versus 16, 9.7, that's pretty balanced. 52.49, pretty balanced. But you know, it's more red here, right? So you have some trapped sellers at the bottom of that candle. And we're gonna see a lot more trapped sellers in the next candles. So now we can move on to the next candle here. Now, you see, this is just using common sense, and we're gonna see it here again. So first of all, look at the delta here, minus 131, but that's a big negative delta, right? It's bigger than minus 39, right? And look, the candle's even bigger, another bullish engulfing candle, now engulfing all of these candles and also this one and this one. Another big bullish engulfing candle, even though we have aggressive sellers. Now, another clue, look at this particular price line here at 120,960. You had 157 contracts, sell contracts, market sellers, versus only 75. You had twice as many sellers here, okay? And yet that candle closed bullish. Here you had 67 versus 32, twice as many sellers. 88.79, that's pretty balanced, right? You would call that an imbalance. 157, there's quite an imbalance. Sometimes there's pretty much, you know, there's almost as many sellers, or you see 47 versus 37 on this price here. It's not a big imbalance, but here you have a pretty decent one, right? A lot of sellers completely failing. 67 versus 32, 88.79, that's balanced. Let's look at the next candle now. Minus 234. The delta is getting more and more bearish, yet we keep going up. So each of these candles here, there's limit buyers here. There were limit buyers down here. Now there's limit buyers all buying up all of that selling pressure here. All of that negative delta, these market sellers are being absorbed by the limit buyers. Now again, look at the next candle here. All of these sellers here, this is really red, 71 versus 9, huge imbalance. You got 7 times more sellers than buyers in this particular price line here. 73.21, 44 versus 3, 51.8, 31.8, right? You have stacked imbalances here, right? Stacked meaning they're all above each other, right? And here you have a lot of sellers and very little buyers. These are all imbalances right after each other. And again, that candle is bullish. Not a big bullish candle, but minus 234 bullish candle. This one, there's not much going on. It's a bullish delta, slightly bullish, and the candle is slightly bearish, but it's kind of neutral. You don't care about that. You can see 79 versus 70. That's pretty balanced. And the whole candle is pretty balanced. Now this one, again, a bullish candle. We're back on a negative delta, minus 47. Look at this huge imbalance here. 141 versus 24. Candle keeps on being bullish. Here, next one, 70 bullish delta, so that kind of makes sense, and the candle was bullish. Okay, we can kind of ignore that. So this was my entry, actually. I went to the gym, but before going to the gym, I think it was right during this candle, or maybe a bit early, I can't recall, but I put a limit order above these highs because I was thinking, listen, if these sellers are failing, right, these big sellers here, these big sellers are failing and we break out, it's going to be an honest breakout, right? It's going to be a real breakout, most likely. Considering all of the previous clues, right? We have this range here. We have a lot more sellers in this range than we have buyers, and yet price is struggling to go down. We grabbed some stop losses here, had this wick up, right? So, and every time we always had some sellers at the bottom of these candles failing to push price down, okay? So I was like, okay, if there's a breakout, it's most likely, I'm not sure, but it's most likely going to be a real breakout. And again, I'm following the trend, okay? I'm not looking for a short breakout here. I'm looking for a long breakout. Now let's look at the next candles. We're not going to do them all, but just showing you the logic. It's kind of just common sense. It's a strategy. You're looking for divergences, right? Divergences between what the sellers are doing and what the candle and price is actually doing. That's a divergence. Bearish sellers, bullish candle. So in this candle, again, you can see at the bottom, you have all of these sellers, you have imbalances. 64 versus 9, 72 versus 17, etc. 41 versus 0 at the bottom. Isn't that crazy? And yet and minus 82 again, bearish delta, and another bullish candle. Okay? So once you're in that trade, you're pretty confident. I wasn't looking at the charts at that time, but had I been looking at this, I would have been like, wow, I could have added to my trade actually, because this is just, I mean, perfect. Okay? And then you start having some real positive delta. 146, this is neutral, but just 3 positive delta and a nicely bullish candle closes above this one, 176. Then we have a bit of a correction here, but you can see we have a wick. This is the red bodied candle, but you have a wick here, big wick, which takes the lows of these previous candles. Might have been some stop losses. And here again, 121 sellers versus 18. Again, an imbalance, and they're stuck at the bottom. These sellers, they're at the bottom of these candles, so they're in drawdown immediately. So they're kind of giving their liquidity to the market, giving some fuel, extra fuel for the market to push up. And they're being absorbed, and they're being trapped, what you call trapped at the bottom of these candles. They're trapped here, all of these sellers. This is just giving fuel and more fuel for the market to push up, more confidence for you to take your trade. You could have entered from this candle, right? You see all these guys trapped here and being absorbed. You can enter from this bullish engulfing candle. And now finally, this is the candle that went crazy, but look, now the buyers started being really confident again, and you have very aggressive market buyers entering. 191, 97, 199, 188, 207, huge market buyers, okay? And I'm just going to leave it there because I hope this is not confusing. I know what this looks like, but in the end, you have sellers versus buyers on each side of the candle. You have your delta here, right? It's maybe the kind of complicated thing about it, but it's not complicated. You just add up or subtract buyers versus sellers, and you're going to see if it's bullish or not, if you have more sellers or more buyers. And then you look at what the price is actually doing. So you're looking for divergences, right, between what the buyers and sellers are doing and versus what the price is actually doing. That's a divergence if you have more sellers but price is going up. And this is telling you that there is absorption. Divergence equals absorption. So there's limit order. Now you know there's limit orders that are way stronger than the sellers. And you want to be on their side, on the side of the limit orders, pushing price up. And that's it. Listen, there's not much else to say. And I've been doing videos. If you've been watching my videos previously, I've been doing stuff on Bookmap, which is exactly the same logic. Bookmap just shows it differently with big green dots and red dots. But it's the same principle, is you're looking for absorption and you're looking for divergences. I'm going to be doing more videos on the actual footprint chart because I'm really starting to enjoy it. I like having kind of this X-ray view on what's going on inside the candles. Is just amazing. But so if you want, and also my previous video was just about CVD divergences, which is exactly the same principle without all of these numbers. But if you don't have a footprint chart and you don't want to get into it right now, you just want to use a CVD line. It's just this line here, right? And it's free on TradingView. You can just watch my previous video explaining just how CVD work and how to find these divergences without using the footprint chart, just using the CVD line. Yeah, that's it for me today. Let me know in the comments if you enjoyed this, if this makes sense to you. If you have some questions, I'm going to be doing some more videos about a footprint chart and how to use it, explaining maybe some other strategies. But that's it for me today. I wish you guys luck on the charts, and I'll see you guys around in the next video.